The gains continued last week as all 5 major markets continued to climb higher. In fact, this was the 3rd consecutive week where all 5 of the major markets saw gains. This is also the 2nd week in a row that emerging markets led the pack. After spending all of August trading below 3,000, the S&P 500 returned to the 3,000 level with a weekly high of 3,017.33 and a weekly close of 3,007.39. The gains last week were fueled by reports that both China and the US desired to return to the negotiating table. A clear example of this was a brief surge seen in the S&P 500 on Thursday morning after it was reported that the Trump administration was considering an interim trade deal with China, which would delay tariffs. Markets climbed even higher later in the day, reaching an intra-week high that placed the index back within 11 points or 0.35% of the all-time intraday high set back on July 26th of this year. While the climb back to record territory last week was a welcome sight, it was the value side of the style box that caught most of the attention last week. While the value stocks have been trailing the growth stocks for much of this year, the gains in a matter of days helped to recoup most of the underperformance. Furthermore, while large cap growth has been dominating its lower capitalization peers, it was small cap value that added the most gains for the week. Year to date, the small cap segment still trails large cap, but now to a much less degree. But this was just part of the shift that took place last week. Another major move was the increase in the yields of the longer-term durations of the yield curve. The 10-year Treasury ended the week of September 6th with a yield of 1.55%. But after a substantial week of daily increases, the 10-year ended the week 45 basis points higher at 1.95%. This places rates back at the same level of August 1st. In some ways, this mirrors the drop and recovery seen in the domestic equity market at the tail end of the summer. Finally, crude oil traded lower last week. However, this move down would be short-lived. News came out Saturday morning that the world's largest oil processing center in Saudi Arabia had been attacked by Yemen Houthi rebels. This took 5.7 million barrels of daily production offline, and likely for some time. This represents half of Saudi Arabia's total production and 5% of the daily global output. As a result, oil prices jumped 20% in Europe and 15% in the US at Monday's open. This move will likely create even greater pressure on the Chinese economy as they import more oil than any other country in the world.